Hello, it's Wednesday, July 18th, 2012, and I'm Tony Christopher with a daily outlook from UFX Markets. We begin with the U.S. stock market. Wall Street closed the trading day in the green after Fed Chairman Bernanke testified yesterday. The investors are waiting for the second part of the testimony, and they hope for a signal to start the QE3. The Nasdaq rose by 0.64%, the Dow Jones gained by 0.66%, and the S&P closed positive, gaining by 0.80%. The U.S. dollar fell versus most of the majors after Chairman Bernanke's testimony, who disappointed investors who were betting on signals for a third round of asset purchases by the central bank. The core CPI came out at 0.2% as forecast, and the industrial production came out at 0.40% as expected. Today, the building permits is expected to come out at 0.76 million versus 0.78 million previously. Euro now. The euro gained against most of the majors after a successful bond auction in Spain, and the interest on the bonds remained below the 7% level. The German ZEW economic sentiment came out worse than expected at minus 19.6 versus minus 17.3. British pound now. The cable rose by 0.13% yesterday, while the CPI came out 2.4% worse than the forecast at 2.8%. Today, the claimant count change is expected to come out 7.4K versus 8.1K previously, and the MPC meeting's minutes is expected unchanged at 0.009. Turning to the Australian dollar, the trend for the pair will continue to be bullish. The new motor vehicle sales came out minus 0.6%, and the MI leading index came out 0.80% better than expected at 0.50%. Today, no more economic data is expected. And finally, in commodities, gold fell earlier to $1,572 an ounce and recovered by the end of the trading day, closing at $1,582 an ounce. At crude oil rose 1.09%, rising for a fifth straight session, crude's longest winning streak since April, closing at $89.15 a barrel. The crude oil inventories is expected today at 0.5 million versus minus 4.7 million last week. Well, that's it for today. I'm Tony Christopher for the Daily Outlook. Be sure to find out more at ufxmarkets.com.